You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim. Good to be back.
You're saying right now is the opportunity to place yourself to be prepared for a coming bull run on gold and silver. So how do you set yourself up for that?
Well, I think what really helps for me, and what I would call this, it's analogous to a checklist that a pilot goes before he takes off at the end of the runway. And it's our old friend, the Boyd cycle, which involves 4 steps: observe, orient, decide, and act. And so, first of all, you look at what's going on in the big picture, and I think it's important to continually go back each time and say, what's changed in the big picture? What's going on? What's more important now than it was 6 months ago? Get a clear idea of where the metals are, And so, for example, now we see gold and silver in sideways action with a bias toward the downside, but still within the congestion area that was set up last November on the 4th attempt down in this area. And so we see better mining stocks holding up well with higher highs and higher lows. We see quite a bit of negative comments on the part of analysts that we could be seeing. We're going to see a breakdown with new lows in gold and silver. Anything is possible, but I think you have to try to filter some of that out. And if you believe that, that we're going to see much lower prices, then you're going to approach this wholly differently than if you think that these congestion areas that we have are going to hold and that they're going to build a sideways base over time, which will eventually lead to higher and then eventually much higher prices over the next 1 to 3 or 4 years. And so you get your big picture, get that pretty clear as much as you can, then you orient the situation to yourself. What are your premises? Do they still make sense to you? Do you still believe in them? What are your goals? What are your goals for this market in terms of how much you'd like to earn and how much risk you're willing to take in order to do that, your risk reward? What's your financial ammunition? Do you have some money to deploy? Can you sell some stocks that have underperformed to get some money? How are you going to go about this? So you're orienting your own self in relationship to the bigger market. It's like a fish swimming in the water. The water gets warmer, the fish is at a little less different activity level than if it gets colder. Then you decide that third step, and that's planning your work. Set up the plan and set out how you're going to deal with this. How much money are you going to spend on each company if you get a chance to buy it? And then you start looking for specifics. And that takes you well into the process toward moving to actually doing something if certain preconditions that you were looking for set themselves up.
What are the key conditions you should be looking for?
Well, I think in this market, you're looking as much as possible to buy weakness, and that's always a good thing to do. But it's amazing to me how even the very quality companies can have very large retracements and still keep their bull trend. There was a very well-known large royalty company that dropped $6 or $7 a share from about $58 down to $50, and now it's back up to $53 again. So that's a fairly significant drop. I mean, that's 10 or 15%. And so if a company that's at the best of breed can do that, you can imagine what the others are doing that maybe don't have quite that much support. So looking to buy smaller than you'd like to buy and lower than you think you're going to get, and you'll be surprised at what kind of a fill you might get.
You were mentioning before we went on air that even if you're going for a quality stock, in one day it can change a lot, so you really have to be on your toes if you're going to take advantage of that.
There's a way to do this, and it's not predictive, but it does happen, and it happens more often than you might think. I've seen some very high-quality companies that for no particular reason that I could see had a huge one-day swing. It was often intraday. It could be because a large holder is selling a block of shares at the market. It could be a capitulation on the part of a group of shareholders. It could be some news that came out that people didn't like, but yet fundamentally the company hadn't changed in terms of its viability. Any number of things like that. Or it could simply be a market that got real quiet and somebody on the short side decided to run a bunch of stops because the brokers know where those stops are. Any number of things like that could happen, and you could have a $5 stock that traded intraday. It had been in congestion, say, between 5 and 5.50, and suddenly it went down to 3.75 and then closed at 5.10. So if you had an order below the market, just for something like that, maybe a lucky number for you or whatever you felt it might be, a good till canceled limit order in there, you might get a fill and you might shock yourself by having a 40 or 50% profit intraday.
Should people be careful not to get too excited when there are big swings?
Yeah, I think so. You have to, the market doesn't give you the reasons for these things ahead of time, and we all try to do that. We go, well, now the market just did this. What does that mean? Well, sometimes we don't know for quite a while, and sometimes we get the wrong idea. So we just accept what it is and try to figure out what significance, if any, it has, and a lot of times it has less than we think, and then go ahead with our plan. So we don't want to let those outliers disrupt the plan that we've set in motion. And if we've set the plan up and we're following through on it in a logical way, following these 4 steps, we're going to be inside whatever takes place, and we're going to oftentimes be acting in parallel with events, or maybe even superseding them, as opposed to following up after something's happened and the battlefield is littered with all sorts of destruction, and then ask ourselves, now what should I do? Or simply going out and trying to buy to catch up before it, quote, gets away.
David, you've always said you have to be aware of the situation you're investing in. Any geopolitical situations we should be aware of for people who want to get into precious metal stocks?
Well, there's so many things going on now with the flashpoints in Ukraine, with the situation in the Middle East, with the collapse in oil prices, with the incipient rise of inflation, which looks like it's going to be coming up here over the next year or so, with wage-pushed inflation, with governmental policies which still really aren't addressing most of the core issues. All those things are out there, and they're swirling around. And then we have the continual offtake of gold and silver, physical, and the movement from west to east. So all these things make a pretty muddy water to really try to sort things out. But if we're following what we believe is what makes sense for us in terms of our investment profile, and if we're doing it in a way that is calm so that we're relaxed and not caught up in these events so much emotionally, it can be better for us and more profitable. And so, what I'm looking for and have been looking for and have been adding to my position and taking a few new ones over the last couple of months is I've been looking for what I call best of breed or regional best producers. So I look, let's say it might be Mexico, or it might be Yukon, or it might be, Africa, whatever. What do you think is the best 1 or 2 companies that you know about in that area that you want to hold or you want to add to? And you look at them and see if they still are doing what you think is best, if nothing happens in terms of country risk that could put them into jeopardy. And then you go ahead. And, some of the companies that were really, some of the ones that have been favorites for many years, for a variety of reasons, are not quite doing as well as they should be, all things considered. And you might not want to hold that company anymore, or you might want to cut back your position. I've dropped shares of a company that I've held for 5 or 6 years. It's not going to go away, but I think it's going to underperform for a while. And I think I'll be able to get back on and catch most of the move when it finally turns around, but others that I think could move more quickly and more decisively. I look for unloved special situations. There's a company that I follow and have had a position in for several years, and I've written about it in Yukon, that has one of the highest grade silver deposits in the world. They're not producing right now. They close the mine until they get higher prices. But they didn't just sit there. They're now going through, they have been going through over the last year, cutting costs, lowering their production profile, what it costs, their all-in sustaining costs. They're down to around $15, $16 an ounce now for when they open back up again, doing more carefully spaced infill drilling to prove up more resource. And by the way, the cost of doing that, as you can imagine, has dropped a lot because of the price in oil, and they're using that as an opportunity to get more bang for the buck. And they actually have a company, a subsidiary company, that does reclamation work in mining areas, so they have an income going, and the market, I don't think, appreciates that as much as it should. So it's not like they don't have any money coming in. It's just that they're wisely not producing and selling silver into a soft market. They're going to wait till it gets up above $20 an ounce and then open up, rather than selling a lot of high-grade silver than just trading dollars. And that's the type of thing I like to look at. Also in terms of uranium, which, believe it or not, is a metal, and uranium is giving signs of perhaps making a substantial move forward going into this year, later this year, and next year, and maybe for quite some time. And so I look at the one or two companies that I like the best on that, a producer and an exploration company, and look at the buy prices, when prices drop. And one thing I found, Jim, is that oftentimes textbook analysis tells us to try to buy a 1/3 or a 1/2, a 50% retracement in a bull move or in a sideways move. And I'm finding that with some of these companies that I follow that I consider to be pretty good companies, you can actually pick it up oftentimes at a 60% retracement, which does nothing to the bull move except be a little deeper than you might normally expect. So sometimes you can kind of high grade, so to speak, your purchase profit by putting your buy order a little bit lower than you normally would because of so much indecision that we find in today's markets.
Last year's big mover was Palladium. How's it doing now?
Palladium is holding its own quite well, and it reminds me, palladium and platinum declining into huge deficits, the price declining and being sideways and sometimes a little lower in platinum. I think palladium is a little stronger now. But, when those guys finally decide to turn around, they might really surprise people with the strength of the turnaround, and I'll guarantee you that for the first leg up, for most of that new leg up, most people will be disbelieving that it's happening, that it will maintain itself, and they'll leave a lot of money on the table rather than having the ability to accept a little more risk now, which is information risk, and accept less price risk by buying selectively down into declining prices of some of the very few producers out there that are still holding their own.
David, thanks a lot for chatting with us.
You bet. It's been good speaking with you today, Jim.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.